Passive income, one of the most commonly searched terms on the financial education. Of course, who doesn't want to make money while we are sleeping? In this video, I'm going to focus on one particular part, on one of the most accessible ways to make passive income, which is investing in dividend stocks. Welcome friends to Growth Bolt. Alex here, and you would do me a huge favor by hitting that like button below. It would help others to find the video as well. Let's get started. We have two different ways as investors getting paid. The first way is by appreciation of the stock. Let's say the stock costs $100 today, an Apple stock, and in 2 years the stock will be $500, really lucky by the way. Then you made a $400 of profit. The second way to make profit is by receiving a dividend. A dividend is a payout ratio which you receive from companies' earnings. And that would be a percentage. Let's take an AT&T stock for example. You would invest $100 in AT&T, they pay you a dividend of around 7% a year, not too bad, and that's why you would receive $7 in the end of the year as dividend. Some companies pay out monthly, quarterly, some of them pay out yearly. But why are they paying a dividend out in the first place? Because the company, when they make some profit, they have three options. They can reinvest it in growth, basically make new products or acquire new businesses and then grow, and the company grows and your portfolio would grow as well. A second way is save the money for emergencies. If something bad happens like the Volkswagen scandal, you knew it, wow, they polluted the entire globe and bullshitted us. And that's why they had to pay huge fines, and that's why they needed some cash for that. So the company could save some cash from their profits. A third way, what they could do is give you a dividend, because the company might not grow that much anymore and they have to give something to their investors because the stock will not appreciate in the future or just keep the value. Then for you as an investor, it's not really a lucrative company, and they want of course that you give them some money to spend. And this is actually not too bad. Let's say you have $1,000 today, you invested it at AT&T, the $1,000, and this company, they will probably not grow much, but what will happen, you will receive 7% out of a dividend yearly, which will be $70, and you could reinvest this $70 and buy more stock of AT&T, and then you have the power of compounding. And this is really a super powerful force. And now I will make a couple of examples in which stocks you would need to invest to get your $1,000 quicker as a return, as a passive income. Please also note, this is just for educational purposes. I don't recommend to any company that you should go out, take your money and start investing. What I recommend to you is just play a bit with the calculator. You will see different scenarios, how quick you can make it happen and how quick it depends on you. Depends how much money you would put in, and depends what kind of companies you would choose. I highly recommend to diversify, not just picking one company and then just praying every day and not sleeping every night because you are scared the company might just go bankrupt. Can happen. Or the company just might go to the moon, right? Like for example the Apple stock did. We never know that as investors. That's why it's really important to find good companies and have diversification. If something happens to one of the companies, you can just go ahead and say, okay, bad luck, whatever. Or if they go to the moon, you say, wow, that was great investment. And that's what I would recommend to you as well. Please diversify, but let's see a couple of examples how you could make your $1,000 while you are sleeping by investing in some of the companies. In this scenario, we will do three ways. We will just pick a really slow mover that pays you a dividend, a high growth company with a little bit more risk that could probably get you quicker to the journey, but the risk is also higher. And the third option is kind of in between, or for example, if you would invest in an ETF. And now let's have some fun together and make those calculations. Let's get started. I'm super excited when I see templates, and you will receive this template from my site. You can just find it under the link below. When you just plug in your numbers, I will show you how to play with that template, and then you can use it based on your situation. So just fill in only the green fields. I mark them green. Everything else is with formulas, and just don't change that because then it won't work basically. So let's say you start all with the initial investment of $10,000. It can be for some people 5,000, 1,000. For some of you, it might be much more, and everybody of you will have a different goal. But just for this calculation, we will assume initial investment of $10,000. You will add monthly $500. So every month you will invest additional $500. And let me take, for example, AT&T stock. It has a year-over-year growth. yeah, at around 0%, right? It's not a growth stock anymore, so it just basically keeps more or less the value. If you do dollar cost averaging, just Google it up what it is, but then you will see it has around about a return of 0% and a dividend of 7.21. Let me take a look quick at the AT&T stock. And you plug in your monthly goal, which you would like to achieve, which is $1,000, and expected market return. Of course, you could put here in again the AT&T 7.23%. Let's say after tax, it all depends on which country you live. There are some countries where you don't pay any tax. In some of them, they are really high. So it really depends. But here we have with 6%, a magic number of $200,000. And how many years will you need for that? Let's just take a look at the table down there. And you see, so basically in the end of 16 years. So if you're 20 today, with 36, you would have, congratulations, by the way, then you would have $1,000 as passive income. So you can sleep at the beach and just enjoy your journey. So it depends what your goals obviously are. Let's make another example. We are taking now a Johnson & Johnson as a stock. Johnson & Johnson pays us a dividend of 2.55%. And I just checked it prior. The stock was growing at around 12% year over year for the last 5 years. And we see here, we are getting much more quicker to our destination. Our destination, because the stock has much higher appreciation, obviously it's growing, and it pays us a dividend as well, which is super, super nice that we are getting already to our destination much quicker. Just after 11 years, we save additional 5 years. Wow. For example, with Microsoft stock, right? 24% year over year growth, pays a dividend. I have to check it out again. 1.04%. And we are there after 8 years. Wow. So if you're 30, you will be 38 already getting $1,000. I'm turning 35 tomorrow. So I would be 43 and I would have my $1,000 passive income. Obviously, you need to check it with different stocks. Maybe it's better even to pick an ETF, then it's much more diversified. So, and let's say, for example, you can also have a different goal. You want to reach $2,000, or let's make it much bigger. Let's say $3,000. You can have, depends where you live, a pretty decent life with $3,000. Invest in a S&P 500, an average return between 10, 12%, 8, 12%. Let's take, say, 10, and a dividend of 2% or 2 something. So then it means if you're 20, you could be retired with 40, right? You could be financial free or just have an additional $3,000 monthly income and continue working. This is with this scenario here, right? So if your situation is different, let's say you have $100,000, your grandma was super rich and just gave you that money, and you're having a fantastic job which you're saving $1,000, you can be retired after 10 years. Wow. If you like my content or I gave you any new perspective on the stock market, please make sure to subscribe. And thanks for watching. See you next time with Growth Bulls.